estate investor came to me in a panic facing over $1 million in potential capital gains taxes, and she was convinced she was about to lose a huge portion of her wealth to taxes. Hi, I'm Lisa Marie Odeja, CPA, EA, and a tax strategist. I'm also a former federal government auditor, and my firm focuses on working with real estate investors and high-income taxpayers on strategic tax planning and advisory services. Now, back to the investor. She was approaching retirement and wanted to move closer to her family, but selling her home in order to move closer to her family was going to trigger over $1 million in potential capital gains taxes. And at the same time, she owned multiple properties and was also in the process of building another investment property. However, she was running short on cash needed to complete that project. So she came to me feeling quite overwhelmed, believing she was facing one major problem: a massive capital gains tax bill just to move closer to her family. And I remember her asking me, "Lisa, is there any way around paying these taxes?" But after hearing the full story, I realized we weren't just dealing with the tax problem. We were dealing with moving closer to family, retirement timing, a major capital gains issue, cash needed to complete another investment property, and how to preserve and expand her overall financial position. This is where strategic tax planning becomes very different from simple tax preparation. So instead of immediately liquidating the property, I designed the strategy to reposition that residence into investment use so that it could continue generating rental income while creating additional long-term planning opportunities. Now, this allowed her to move closer to her family without immediately triggering that large capital gain event from selling her residence. And then, through a cash-out refinance, we were able to tap into the equity from that residence, and that equity helped solve another major issue. Now she could use part of those funds to help complete the investment property she was building, which resolved that cash shortage she was facing on that project. And as a bonus, that additional cash also placed her in a position to purchase another investment property. So, instead of selling the home, paying a massive tax bill, and walking away with fewer options, we were able to resolve all of the major issues she originally came in with. She was able to move closer to family, keep her residence working for her as income-producing investment property, resolve the cash shortage on the investment property she was building, improve her overall financial flexibility, and expand her long-term wealth building opportunities through the purchase of an additional investment property while also positioning the residence for future strategies such as a potential 1031 exchange down the road. This was a complete repositioning of her financial situation. She came in thinking she had one choice: sell the property and pay the tax. But with the strategy, we were able to turn that same situation into a plan that helped her preserve and expand her wealth, create more investment opportunity, improve cash flow, and still accomplish the personal goal that mattered to her: moving closer to family. And this is where my federal government auditing background becomes extremely valuable, because it gives me a very different perspective when designing tax strategies for clients. The strategy also needs to be properly structured, legally supportable, thoroughly documented, and able to withstand scrutiny in the event of an IRS audit. Because if the strategy is not properly documented and substantiated, the taxpayer risks losing that very tax savings they thought they had secured. Anyone can talk about tax strategies, but far fewer professionals have actual government auditing experience and understand how strategies are evaluated, challenged, documented, and defended under scrutiny. And that is what truly matters. And that's ultimately how I approach strategic tax planning. I don't just chase tax savings. I think about whether the strategy is supportable, defensible, properly documented, and aligned with the client's larger financial goals. Because true tax strategy is not just about saving money today. It's about creating sustainable, supportable, long-term financial outcomes. And this is something many investors miss. Sometimes the biggest mistake is assuming there is no solution to the problem. The investor thought her only option was to sell. But strategic tax planning before the transaction completely changed the available opportunities. One of the biggest misconceptions people have is thinking tax planning is only about finding deductions. But sometimes the most valuable strategy is stepping back and restructuring the transaction itself before the decision becomes final. Because once that transaction happens, many planning opportunities are gone. So, if you are a real estate investor or high-income taxpayer who feels stuck, overwhelmed, or concerned that you may be paying more tax than necessary, feel free to click the link below or scan the QR code and schedule a consultation. During that consultation, you'll be given an opportunity to give a brief overview of your situation or concern, and I'll explain how my firm operates. And then we'll decide if it makes sense to move forward. Let's put our heads together and see whether there may be a more strategic path forward for your situation as well. If you found this video helpful, feel free to like, comment, and share with another investor who may need to hear this. And don't forget to subscribe so that you don't miss future content like this. Thank you so much for watching, and I'll see you in the next video.